So let us now take one question relating to the entries. Today break and all one top. No, thank you. Okay, I will give after this, definitely. Entries. 6 entry, 3 minutes. 3 minutes. Question number 15, page number 122. Let me read out this question for you. Okay. Give journal entries. In the books of branch A, to rectify or adjust the following. Head office expense rupees 3,500 allocated to the branch but not recorded in the branch books. Depreciation of branch assets whose accounts are kept by head office not provided earlier, rupees 1,500. Branch paid rupees 2,000 as salary to head office inspector, but the amount paid has been debited by the branch to salaries account. Head office collected rupees 10,000 directly from a customer on behalf of the branch, but no intimation to this effect has been received by the branch. Remittance of rupees 15,000 sent by the branch has not yet been received by head office. Branch A incurred advertisement expenses of rupees 3,000 on behalf of branch B. I will give you, first of all, 1 minute. Quickly make entries. Let me confirm your entry. 6 transaction. First of all, be very clear, friends. You are making accounting entry in whose books, first of all? Not in head office and branch and all. In branch. In the books of branch A specifically. In the books of branch A. The first one, the head office expenses. Rupees 3,500 allocated to branch but not recorded in the branch books. Has to be accounted in the books of branch A. The head office have incurred first expenses and it may incur common expense of various branches. Later on it gets allocated. So which means head office have already charged the branch. Branch have not recorded that. Now you record. So expenses debit, which they have not paid. So naturally credit is offered to head office account because that was paid by head office. So entry will be expenses debit to head office account. It is the expenses of the branch, friends, because when I say head office expenses allocated means it is the common expense attributable to the branch. So that was allocated, which was so far not accounted by the branch books, which is getting accounted now, expenses to head office account. Depreciation of branch assets whose accounts are kept by head office not provided. So now you provide depreciation to asset. Head office account 1,500. Oh. Sir, you understanding? Branch paid rupees 2,000 as salary to a head office inspector. It should be the expense of head office. That's not the expense of branch. Expense of head office paid by, and it is already accounted. You are not supposed to account it afresh. It is already accounted as salaries. It was accounted as. So cash was, what entry they made means salaries to cash. What entry they should have made na head office to cash. Now head office to salaries. That's very good. 2,000. Like this only entries comes pa. But you should put your application there and you can easily make out the entries. Usual entry should have been head office expense paid by as head office to cash, but already accounted as salaries to cash. Survey adjusting entry or rectifying entry is head office to salaries. How much? 2,000. Head office collected rupees 10,000 directly from a customer on behalf of the branch, but no intimation to this effect has been received by the branch. It was not received, now received. That is why they are asking you to make entries. Correct? Respond pa. So, head office collecting cash from customer. So, in the books of the branch, now only it is getting accounted. Head office to, as if money was received from debtors and given to head office. Cash to debtors, head office to cash, head office to debtors. Cash, cash cancelled. Next. A remittance of rupees 15,000 sent by the branch has not yet been rectified by, not yet been received by head office. Reconciliation to be made at receiver's place, that is head office. Now please understand, reconciliation to be made at receiver's place. So a remittance of rupees 15,000 sent by the branch, it is already accounted by the branch. Everybody. Now can't be recorded by the branch once again. They have already accounted as if cash has been sent. Everybody? So that particular entry should be made at head office books. No entry will be made in the books of, no entry in the books of branch. Branch A incurred advertisement expense of rupees 3,000 on behalf of branch B. Branch B to cash. Advertisement to cash. Head office to cash. We paid cash. Understood? No branches and all will come. It is not our expenses. So thereby head office to cash. How much? 3,000 rupees. Everybody? So one more question in this line. Say 10 minutes break. Sixth entry, what entry ba? Head office to cash. How much? Question number 9, page number 116, 117. A company having head office in Delhi and branch in Bombay and providing you the trial balance. One thing what we should appreciate is that the trial balance is given after the preparation of P&L. Trial balance is given after the preparation of P&L because no incomes, no expenses, they have given the net profit for that year. Everybody? But they have not appropriated certain items. Usually such appropriation will be made as a note to the balance sheet. As a note to the balance sheet. Everybody? Like interim dividend can't be an item that can be shown within the balance sheet. It is to be adjusted from the profits. But there is nothing called P&L appropriation henceforth. As per the revised format, we know that all the appropriation shall be adjusted as a note to the reserves and surplus in the balance sheet. Everybody? Please respond, friends. Okay. Now let us understand this question. They have given trial balance of the head office and trial balance of the branch. Final requirement of the question is give the branch current account. Branch account is what we call it as branch current account in the head office books. After incorporating branch trial balance through. So even before current account, they are asking you incorporation entries. Even before the current account, they are asking you the incorporation entries. And then finally they are asking you the balance sheet. Three aspects they are asking you. What and all, friends? Incorporation entries, current account, balance sheet. But one thing that you should know is that even before the incorporation, you should make dash entries, reconciliation entries. Once you should reconcile, you should make the head office account and branch account balance should be same. Only then you can go with incorporation, branch current account and then the balance sheet. Is that clear to you, friends? Okay, now listen. If you look into the branch current account balance in the books of head office, you find it is 1,33,710. And if you see in the books of branch, head office account shows 1,29,010. So if you see the difference between these two amounts, 4,700. There is a difference of 4,700. The reason of such 4,700 given in point number A and B. Point number A. Cash remitted by branch on 31st December but received by the head office on 1st of January 2015. Rupees 3,000. Everybody? So cash remitted by branch on 31st December 2014, received by the head office on 1st of January 2015. Rupees 3,000. Understood? So which means this amount was accounted by branch, not accounted by head office. If no other information given, we will account at who is going to receive that? Head office. Understood? Remittances in transit to branch in the books of head office. Remittances in transit to. So branch which is showing an amount of 1 lakh will be reduced by 3,000. Stock stolen in transit from head office and charged to the branch by the head office, but credited to head office, but not credited to head office in the branch books, as the branch manager declined to admit any liability not covered by insurance. Rupees 1,000. there happened a loss of stock. That loss of stock was accounted by head office as if it is the loss of branch. The branch manager felt that no, it is not our loss, we will not account that. The goods has been lost. Now the head office is going to prepare financial statement, no other choice left with the head office but to account that loss in the books of head office. Understood? It has been very clearly given. The manager has not accepted the liability for the loss. Understood? So thereby this loss also has to be accounted by the head office by offering credit to the branch. Why should we credit branch, sir? Because already we have debited branch. Loss is already accounted. Respond. By charging whom? Now we should account as if it is our loss. Debit abnormal loss or debit loss of stock. Credit branch. That way we are crediting 3,000 for remittances, 1,700 for this loss. Total credit is 4,000. So we reduce the branch by 4,700. Hence 1,29,000 and also hence reconciled. Everybody, once a reconciliation is made, now you can incorporate the trial balance, which is nothing but assets, liabilities and the profits. Respond. When we are incorporating the branch trial balance in the books of, we won't take this head office account. We won't take we take only assets and liabilities. Is that clear? Everybody. Then we prepare branch current account showing zero balance. But after incorporation, branch account will show. So for the preparation of overall financial statement, branch account one account will not be there in the books of head office. So we will be preparing overall financial statement. Everybody, please respond, friends. And the format should be based on the company's format. Shall we? Everybody?
Yes, sir.
Okay, now let us try this one by one. First, reconciliation entries. Entries in the books of head office. Question number 9. Solution. We have entries in the books of head office. Entries in the books of head office. What and all? First entry is what? Reconciliation entries. We have remittances in loss of stock to branch account. Branch current account. 4,000, 3,000, 1,700. So because of this entry, what happens? Branch account balance from 1,33,710 will be reduced to 1,29,010, which is equal to the head office account in the books of branch. Hence reconcile. Now we are going for incorporation entry. Incorporation entry. Incorporation entries. You see the balance sheet here. It is fixed assets, stock, debtors and cash balance. These are the various assets we have. Let us take those assets. Okay. Fixed asset debit. 90. Okay. Stock. 50. Okay. 19. Okay. Okay. To branch current account. 171. 110. Now liabilities wise, we find there are two items, only one is creditors, other one is profit. So we'll bring creditors separately, profit separately. So this is being incorporation of assets. Being incorporation means it is just bringing, recording the assets of branch in the books of, but before you do this, you should have reconciled. Understood? Now proceeding, it is branch current account debit. Two creditors, 10,400. Now it is branch current account debit to P&L. It is branch profit. 31. Okay. Shall we proceed, friends? Now listen. Now listen. Branch current account. Branch current account, we have two balance brought down. It was 1,33,710. Through the reconciliation entry by making as by remittance in transit, by loss of stock, 3,000, 1,700, it is 4,700. Then we will record those incorporated assets and liabilities by sundry assets of branch 1,71,000 to creditors to P&L branch profit 10,000 and this account should tally. This will not have any balance. Same answer. What total? Total? Same total. Yes, same. Yes, yes, I understand. You completed. Make it fast. Friends, please stop talking. Friends, please stop talking. Balance sheet of the company. Friends, please stop talking. Friends, please stop talking. Total. Perfect. Inventories, trade receivable, opening balance of the profit and loss, friends, 25,310. Current year profit of head office of branch. $82,200, 31,700. 25,310 is the overall profit of the company till now, which is still not distributed, which is still there. Current year profit 82,200, 31,700 minus interim dividend paid 30,000. The loss of stock, it is actually not appropriation, but it was not adjusted so far. It is getting adjusted here. So don't ask me, sir, is it appropriation? It is not appropriation, it was not adjusted, now it is getting adjusted. 1,700. 1,07,000. Share capital 8 lakhs, 2 lakhs, 7,510. Trade payable, that is creditors of head office being 21,900 plus, okay, 32,300. So that way it is 10,39,810. Fixed asset of head office 5,30,000 plus 95, 6,25,000. Inventories, that is stock of both the companies 2,22,470 for 70. Trade receivable debtors 50,500. Cash and cash equivalents 62,730 of head office, 550 of branch plus remittance in transit. How much? 3,000. So it is 72,280. 1039,810. That's all. I told you in independent branches, the only problem areas being preparation of final accounts, trading, P&L and balance sheet. Trading, P&L and balance sheet. Actually, we prepare the trading, P&L, balance sheet of the business as a whole. In that process, the question will also be made for final accounts of branch separately, final accounts of head office separately. These financial statements, that is, these final accounts of head office and branch separately, what you prepare is for internal purpose. That won't be reported externally. Whenever you report, it has to be company's final accounts. So internal presentation can be in the normal format only we presenting normal final accounts. Trading account, P&L account, balance sheet. Trading will have what and all? Purchases, sales, closing stock. Gross profit. Then we will have expenses, net profit. Listen friends. Head office will have two types of revenue. One, by making sales to outsiders. The other one, making sales to branch, which they would have indicated as goods sent to branch. But even though it is goods sent to branch, they would have booked some profit in that. They won't send at the cost price. I told you, even though it is not a profit for the overall business, but to measure the real performance of head office, they will book the profit. They will transfer the goods only with a profit margin. Understood? So when you prepare the head office trading P&L, definitely that income will be booked. That income will be, but when you prepare the overall financial statement, these sales expenditure should be completely eliminated. So in an overall financial statement, how it shall be eliminated, we will be discussing in the next class. But today, we like to discuss about the normal, simple final accounts of, not even balance sheet, just a trading and P&L account of head office and branch. In this, only one thing you should be knowing is that, like what we discussed for dependent branch only, the goods which has been transferred by head office to the branch, in that some profit is already booked by whom? Head office. If the goods are sold by the branch to outsiders, then it is called realized profit. Then it is called. But if such goods are not sold by the branch, then there is some unrealized profit for the head office. There is some that has to be eliminated from the profits of branch or head office. It should be eliminated from the profit of head office. But it will be computed based on the closing stock of branch. Are you following? Head office had sent goods worth rupees 1 lakh to branch, in which we already booked some profit. Out of 1 lakh, around 90% has been sold by branch outsiders, maybe for some other higher price, where branch also booked the profit. Some 10% not sold, na? In that also head office booked the profit. La. In that branch would not have booked any profit. Who booked that? So that profit on that goods not sold by the branch should be identified and should be eliminated from the profit of head office. We call this as unrealized profit or stock reserve. Once again, the same stock reserve concept arises, which is unrealized profit. We used to reduce that from the branch adjustment account. So here we will reduce from whose profit? Head office profit. That amount will be computed based on whose stock? Closing stock of the branch. Understood? Because branch receives the goods at invoice price. We'll value the goods at invoice price, because that is the cost price of branch. Understood? So in that invoice price, some margin is there. That margin will be reduced from closing stock of branch. That margin will be computed, but will not be reduced from closing stock of branch. It is reduced from closing stock of head office. No, from the profit of the. So in the profit and loss account of head office, we will write one debit called to stock reserve. To stock reserve or to unrealized profit. In any name you can call it as. Understood? In whose column? Because when we prepare final accounts of head office and branch, we are not going to prepare two types. We are going to prepare two in one only. So it is particulars head office branch, particulars head office branch. Everybody, the last problem for the day. Simple final accounts. A kutti problem. Question number 10. Question number 10. Beta Limited, not beta. Beta Limited having head office at Mumbai and as a branch at Nagpur. The head office does wholesale trade only. Cost plus 80%. Wholesale. The goods are sent to the branch at the wholesale price. Cost plus 80%. The branch at Nagpur is wholly engaged in the retail trade and the goods are sold at cost to head office plus 100%. Following details are furnished for the year ended 31st March 2014. Opening stock, purchases, goods sent to the branch, sales, office expenses, selling expenses, staff salary not aligned properly. Prepare trading P&L account of head office and branch for the year ended 31st March 2014. They are asking you to prepare the trading P&L account of head office and branch for the year ended 31st March 2014. Please prepare, sir. 5 minutes. Time permit, we can revise one more question. No, now only I saw 25 minutes more. Trading and profit and loss account. Friends, please stop talking. Kindly try the problem. Okay. Let us post one by one, friends. Opening stock 2 lakh 25,000. Everybody? There is nil. Then purchases 25 lakh 50,000. Nil. Goods sent to the branch, cost to head office plus 80%, together 9 lakh 54,000 is revenue for head office, and it is cost for branch. That's their only cost. That's their purchases. Then sales 27 lakh, and for branch 9 lakh. Office expenses 90,000, 8,000. Selling expenses 72,000, 6,000. Sorry. Staff salary 12,000. Stock reserve missing. All the information given in the question has been completely utilized, but I find closing stock is missing. So either I have to find out gross profit, or I have to find out separately closing stock, so that the other one can be balancing figure in this account. Everybody? Now gross profit of the branch can be easily ascertained. The gross profit of the branch can be easily ascertained, which is 20 by 200. The gross profit of the branch is 20 by 200. Please listen, friends. Cost of the head office be rupees 100. Imagine it is 100. It is having a markup of 80% on cost. So 80. So selling price of head office is 180. And 180 is the price at which head office will sell goods to outsiders as well as branch. So the goods reaches the branch as at 180. Wholesale price. The goods reaches the branch at 180, which is the cost price of the branch. Now the branch is not selling 100% margin on 180. Look into the question, my dear friends. The branch is selling at cost to the head office plus 100%, which means sale price of the branch is 200. Cost to the head office plus 100%. Are you following, sir? So thereby sale price is 200. 180 is the cost price of. 200 is the selling price of. 100 is the cost price of. 180 is the selling price of, as well as cost price of branch. These details you should be knowing. So profit is how much, friends? 20 by 200 on 9,50,000. 95,000. Everybody? So we find that 95,000 is the profit, correct? Which is how we got 9,50,000 into 20 by 120. 20 by 200. So what is the closing stock of the branch? 99,000, balancing figure. Or if you want to find out this separately, listen, friends, goods available at branch, How much is that, friends? 9 lakh 54,000. Everybody. Now, sales, closing stock. Sales is how much given? 9 lakh representing 200. I want in terms of 180 because these goods are representing 180. Correct, Appa? Please respond. So what is this? 8 lakh 55,000. Closing stock. 99,000. Either you open a working note like this and find out stock separately so that you can arrive GPS balancing figure. This is the format I taught you for finding out the loss of stock. Goods available at the branch, cash sales, credit sales, closing stock, loss of stock. Everybody? So this 9,54,000 is representing what base? 100 or 180 or 200? 9,54,000 is the goods available at the branch is representing 180. This 9,54,000 is the goods sent by head office to the branch, which is representing 180. The sales is representing 200. We converted into 180. We got 8,55,000. Out of this much goods has been sold. And so the balance is closing stock. How much pa? 99. Because, friends, if it is a simple final accounts, it becomes a problem, supper problem. Understood? So to add some spice to the problem, okay, for that purpose only the stock is given as missing information. Otherwise, like normal final accounts, it becomes 11th standard problem. The topic is branch final accounts, head office final accounts. Even though IPCC level topic, but it is a normal final accounts, opening stock, purchase, sales and all. So thereby to add to the spice only, they are giving the missing information in the form of closing stock. Everybody? So in which you are supposed to find out either finding profit and balance closing stock, or you can find out closing stock and arrive profit as, in either way you can do. Is that clear to you, friends? Respond. Now one more thing is, this 99,000 represents 180. In that, profit of head office is included. In that, profit of head office is included. So 99,000 is representing 180. Yeah. What is the cost price of head office? 100. So what is the profit? 80. Understood? So 99,000 into 80 by 180. Stock reserve. 40. In whose books? Head office books. Understood? So we have stock reserve equal to 99,000 into 80 by 180, 44,000. Everybody, please respond, friends. Now finally, head office sales represents what? 180 or 100 or 200? Head office sales. Head office, branch the 100 plus 100%. Head office is selling only at 80% margin. Whether to branch? Understood, Appa? But one thing you should understand, the head office profit is not merely on 2781, it is on 2781 plus 9,54,000. Both are sales only. Are you following? So I don't have space here. You please, okay, let me show here. Profit of head office equal to 27,81,000 plus 9,54,000 into 80 by 180. 16 lakh 60. 16 lakh 60,000. Everybody. So you will get a profit of 16 lakhs. 16 lakhs 60,000. Closing stock 7 lakhs. You can also find out closings as separately also without balancing figure. Everybody? Anyway, gross profit 16 lakh 60,000, 95,000 net profit. 13 lakh. Okay. 95,000 the GPA. How much? 68? Okay. That's all.